Hello everyone, my name is Andrzej ZYGULA. I would like to present you the topic, Are emerging markets efficient? The impact of dividend payment on the company financial performance. Evidence from the Polish stock market. I represent the Krakow University of Economics. Already in the 1950s and the beginning of the 1960s, the so-called dividend information content phenomenon was identified, according to which dividend payments may be perceived by investors as a source of information about the financial situations of companies. The aim of the study is to present the results of the research on the impact of the dividend policy on the economic efficiency of companies, expressed by two relative accounting measures, return on equity and return on assets. The objective of the analysis was to answer the question, does the dividend payment affect the economic efficiency of a given entity? The relationship between dividend payments and the economic efficiency of an enterprise has been the subject of numerous empirical studies. The results of these studies are quite inconsistent. Some studies indicate a positive or negative relationship between changes in the level of dividends paid and financial results, while others do not find such a relation. However, a review of these studies allows to phrase three general conclusions. It can be concluded from the comments presented earlier that the impact of the dividend policy on the company's results has already been the subject of numerous studies. Although these studies provide ambiguous evidence, two research hypotheses, consistent with some of the results presented earlier, have been proposed for the purpose of the further analysis. Hypothesis 1. Dividend payout ratio has a positive impact on the economic efficiency of companies. Hypothesis 2. Decision of dividend payment has positive impact on economic efficiency of companies. In this study, as measures of economic efficiency, dependent variables, two accounting measures in relative form were used: return on assets and return on equity. Subsequently, two independent dividend variables were determined. The first variable, DPR, a dividend payout ratio. The second variable, diff, is a binomial variable. In addition, two control variables were introduced in the conducted analysis, independent variables. The first variable, size, this indicator reflecting the company size and a positive relationship is expected between this control variable and economic efficiency. The second variable, length, this indicator reflecting the level of debt and a positive relationship is expected between this control variable and economic efficiency. Taking into account the adopted variables and referring to the methodology used by other researchers, this study, as can be seen, four stages of research were adopted. Finally, in fourth stage, panel models were used in the conducted analysis. In particular, two estimation methods were used when assessing the parameters of the models: a fixed effects model and random effects model. The ultimately interpreted model was chosen based on two criteria. The first criterion was the Hausman test. The second criterion was the information criterion, the Akaik's criterion. After checking for problems with correlation, autocorrelation, and collinearity, in the fourth stage of the study, the adequacy of the regression models for panel data was assessed. As can be seen from the presented data, the model with fixed effects was selected on the basis of the Hausman test result and the Akaik information criterion. It appears from the model that, firstly, although the sign of the parameter assessment for the DPR variable is negative, which suggests its negative impact on return on equity. The impact is statistically insignificant. Secondly, the div has a positive effect on return on equity at a statistically significant level of 1%. This means that the decision to pay the dividend has a positive effect on the economic efficiency of company. Thirdly, in the case of the control variables, the result shows that only the financial leverage of firms has a statistically significant impact on return on equity. As can be seen from the presented data, the model with fixed effects was selected on the basis of the Hausman test result and the Akaik information criterion. It appears from the model that, firstly, similar to the model for return on equity, the sign of the parameter assessment next to the DPR variable is negative, yet it does not have a statistically significant influence on the return on assets value. Secondly, the div variable has a positive effect on the return on assets value at a statistically significant level of 1%. Similarly to the return on equity case, declarations of companies about the dividend payment have a positive effect on the economic efficiency measured by the return on assets ratio. Thirdly, in the case of the control variables, the result shows that both the size of the company and the financial leverage have the statistically significant positive effect on the return on assets value. To sum up, on the basis of the results of the above two models, it can be stated that the decision to pay the dividend has had a positive effect on the economic efficiency of company, expressed both by the return on equity and return on assets ratios, which allows for a positive verification of hypothesis 2. In turn, in the case of the dividend payout ratio, this variable turned out to have no statistically significant impact on return on equity and return on assets, which means that hypothesis 1 has been rejected. The aim of the study was to present and analyze the impact of the dividend policy on the economic efficiency of companies. The empirical studies showed, in particular, that in the analyzed group of companies, the impact of the decision to pay out dividends on the financial results of companies was statistically significant and positive, which proved the validity of the second research hypothesis. In addition, it was also noted that the impact of the dividend payout rate on the financial results of companies was statistically insignificant and negative, which means that the first research hypothesis was not positively verified. Whether dividend payments carry information about the financial situation of a given entity, it seems that the above lack of consensus proves that the famous word of black remain valid despite of the passage of time. Thank you very much for your attention.